Well, hello there. Welcome along. This is NQ Madness, where I trade just using a little indicator that I've developed, and it's really quite straightforward. I'm just going to backtest from I've chosen last Wednesday. We'll do maybe Wednesday, Thursday, Friday, something like that. We'll just do a bit of backtesting just to see how we get on. But literally, how the NQ Madness indicator works is it's looking for a sweep of liquidity. When it sees that, it's waiting for a rebalance. The market needs to go out of balance. And what I mean by out of balance is there's two states of the market. There's balanced market and then there's out of balance. And when it's out of balance, you'll generally get quite impulsive moves. You might know them as sort of fair value gaps and things like that. And they get filled in when the market balances itself back out. So it's looking for that. And as soon as it sees that, it draws a little box, and then we take the trade. It's as simple as that. The rules are we trade New York. I don't trade New York open from 9:30 because the market is a bit wild. So I trade from 9:45 for a couple of hours up till about 1:30. You can sort of see the market sort of dies off in the afternoon, big style. But New York, first couple of hours, is very good for this strategy. Normally, if I got a winning trade or maybe two winning trades, I'd call it a day. But for the purposes of backtesting here, I won't. I'll carry on just until the end of the trading window anyway. What you need to do is you need to watch the charts, wait until you get a box. Right, we've got a box here. We can see it's a bearish closed box. So that means we are going to anticipate that the market is going to move down after this point. So what we would do, because it's bearish close, we would draw it from the top of the box. This is just a Fibonacci tool to the bottom of the box, set at 0, 1, and then at 40%. Because what we do is we don't wait for any kind of price action or anything like that. We just pop in a limit order at the 40% mark. So I'd pop in a limit order there, stop at the top plus 3 points, so that will be 28. And then we always go for a body close, the nearest body close for our first take profit, and that would be right here, as you can see, because we would enter in on this candle here and nearest body close is there. So that would be number one. Let me just get that. Well, we'd be taking it in there, wouldn't we? So that'd be number one. We would hit that target there. The second target would be here. You would move your stops to break even. So here you would get 0.6R. So that would be 0.6R. I'll put it in there. Well, it wouldn't. It'd be 0.3 because we'd take half the position off, wouldn't we? So we'd get 0.3R there. I think I've done that right. So yeah. Next one. Again, it's a bearish close, as you can see. So we draw our thingy from the top to the bottom. We take in our short position. We pop it in here. Limit order. Stop. 3 above. And then we're aiming for the nearest body close. So we'd enter in here. So the nearest body close is here. And that is a 2.13 to 1. That hits quite nicely. And then sort of the next area would be, well, I mean, it would be there, but that's not, it would probably be sort of here. But we would be at break even, as you can see. So what did we get there? We got a 2.13. So we will call that a plus 1. Give or take plus 1, I guess, because obviously the reason why I'm saying plus 1R is because you take half the position off at 2R, and then the rest would go to break even. So yeah, I think I've worked that out right. I might not be working this out right, but it doesn't matter. Who cares? Right, next one. There's another box here. This is a bullish close, as you can see. It's a bullish close. So what do? We draw our Fibonacci from the bottom of it up to the top. We pop in our limit order long from the 40% mark, which is there. It's a big stop on this one. 35, 38. plus 3 points, and then we're targeting the nearest body close, which is there, the top of the range. Now, interestingly, we do get a bearish close here, so we'll come back to that in a second. Now, this is a 0.63. We hit it. We would then go for our full position, which would be up here, which we hit, which is a 1. So that's a plus 1.63 R, I think. So let's pop that in. Plus 1.63. Okay. Now, interestingly, you may have missed this. Let's just imagine that you missed that trade there, but then you saw this one here, and you're like, oh, okay, so we'll draw it's bearish, so we'll draw from the top to the bottom. That would lose. As you can see, that would... No, it wouldn't. No, it wouldn't. Sorry, this one would also, strangely enough, this one would also win. So we would go to there. Nearest body close is there. You would get your win. As soon as that was hit, stops to break even, then you'd be targeting sort of down here or down here, and you would go out at break even. So yes, that one would also win, but we're not going to include that one because we were in this trade here. And then we carry on. So we've got one here. This is bullish, as you can see. So we draw our line from there to there. We put in our limit order in here. Stop wants to be 12, I think. And we are targeting our nearest body close. So it is here, as you can see, because we get tagged in here. So our nearest body close is there. That's 1.48 on that one. Move our stops to break even. Target the next high, which would be up here. And we get that as well. So that's the full 2.08 R. So I'll put in plus 2 R. I think that's right. It might not be. I don't know. And then we get one more here. And this is a down one. Down, down, down to there. We enter a limit sell to the top, plus 3, so it'll be 9, 10, 11, 12.25, which is there. We're targeting the bottom, which we hit, no problem, and then we target further down, but we would be out at break even most likely, and that is probably we'll say a plus 3, and that is that, plus 0.3. Oops, that should be a plus sign. Now I don't know whether I've added these up right, but we've got 2, 3.6, 4.6, 4.9, so roughly 5R on this day. So you can see how powerful this strategy actually is. And yes, you do get losing days, you do get losing trades, but you get a lot of winning trades. And as long as you follow this mentality that you're trying to protect your trades by taking sometimes small wins, a lot of people look at this and go, what, 0.6R? Oh, that's not good. Well, if you're winning a lot of them, it can be great. So don't worry about that too much. But yeah, that's just one day using the strategy. It's called the NQ Madness indicator. It's a trading view indicator that I've developed, and it works really well, especially if you're trading futures. I don't use it on anything other than MNQ, but you know, I'm sure it'll work well on other futures. Don't know about Forex, but it certainly works well for me with companies like Apex. So yeah, there you go. I'll keep doing some backtesting videos and showing you how it all works, but thank you very much for watching. Got any comments, leave them in the comments and I'll try my best to answer them. Thanks for watching. Bye for now.